1973 didn't start with panic, it started with confidence. People trusted the system, markets were stable, growth looked normal, experts believed they had everything under control. And then within months, that confidence turned into confusion. Oil prices exploded, inflation surged, growth slowed down, and suddenly nothing made sense anymore. But here's the part that should concern you. The signals were already there. People just ignored them. Now pause for a second and think. What if the same thing is happening right now, and you're inside it? Because in 2026, we're seeing something very unusual again. A global system under pressure, while most people still feel everything is mostly fine. Energy disruptions are rising, inflation is still embedded in the system, and economic growth is slowing at the same time. That combination has a name. Stagflation. And the last time the world faced it at this scale was 1973. So here's the real question you need to answer by the end of this video. Are we watching history repeat? Or are we living inside it without realizing? Let's go deeper than the textbook version. Before 1973, the global economy had one hidden assumption. Energy would always be cheap. Oil was around $3 per barrel and entire economies were built on that expectation. Transportation, food production, manufacturing, everything depended on stable, affordable energy. Then the system broke. During a geopolitical conflict, oil supply was suddenly restricted. Within months, prices didn't rise gradually, they jumped from $3 to nearly $12 per barrel. That's a 300% increase. Now here where it gets interesting. People didn't react immediately. They assumed it was temporary. They believed the system would adjust. But it didn't. Fuel shortages spread. In the United States, nearly 1 in 5 gas stations ran out of fuel. Governments introduced rationing. Panic started to build slowly. And then something even more dangerous happened. Inflation began rising rapidly, but the economy started slowing down. That combination wasn't supposed to exist. Economists didn't have a clear solution. And that's when the system entered a phase it couldn't easily escape. Now think about this for a moment. What breaks faster, a system under pressure? Or a system that doesn't understand the pressure it's under? Now fast forward to 2026. Energy is once again the center of global risk. But this time it's more complex. Supply chains are tighter, geopolitical tensions are higher, and global demand is more interconnected than ever before. Let's look at one critical detail. Nearly 20% of the world's oil supply passes through a single narrow route, the Strait of Hormuz. That means one choke point controls a fifth of global energy flow. Now ask yourself, what happens if that flow is disrupted? We don't have to imagine it. In early 2026, around 8% of global oil supply was suddenly disrupted due to geopolitical tensions. That's not a small fluctuation. That's a system-level shock. And here where the pattern becomes clear. In both 1973 and 2026, the problem is not just supply. It's a dependency. Because when a system becomes dependent on something fragile, it doesn't need a collapse to break. It just needs pressure. Now let's talk about inflation, not the version you see in headlines, but the version you actually feel. In the 1970s, inflation didn't spike and disappear. It stayed. In the United States, inflation moved from around 3–4% to nearly 9% within a short period, and eventually climbed into double digits, reaching 14–15% later in the decade. But here what made it dangerous. People didn't notice the full impact immediately. Because inflation doesn't destroy wealth overnight. It erodes it slowly. Now look at today. In 2022, inflation peaked at 9.1% in the US, the highest in over 40 years. Since then, inflation rates have come down. But prices haven't. Food is still expensive. Housing is still expensive. Energy is still volatile. Now pause and think. If your income increases by 5%, but your cost of living increases by 20% over time, are you moving forward? Or quietly falling behind? This is the part most people miss. Inflation doesn't need to stay high to cause damage. It just needs to stay. Now we reach the part where things become unstable. In the 1970s, central banks faced a dilemma they couldn't solve cleanly. Raise interest rates to fight inflation, or lower them to support economic growth. They tried to balance both, and failed. They reacted too late in the beginning, allowing inflation to build. Then they reacted aggressively, raising rates sharply, which triggered economic contraction. Now look at today. Interest rates have been raised at one of the fastest paces in modern history. At the same time, economic growth is slowing. Markets react to every statement, every hint, every policy signal. And central banks are stuck again. If they keep rates high, they risk recession. If they lower rates too soon, inflation could surge again. This is not control. This is a constraint. And systems under constraint tend to break in unexpected ways. In 1973, the crisis was amplified by geopolitics. And today we are seeing a similar shift. But this time it's broader. Trade wars, sanctions, supply chain realignment. Countries are no longer optimizing for efficiency. They are optimizing for control. And that changes everything. Because globalization made things cheaper. Fragmentation makes things expensive. And when costs rise across the system, inflation becomes structural, not temporary. Now ask yourself this. If the global system becomes less efficient, who pays the price? Everything we've discussed so far is visible. Energy risk, inflation, policy pressure, global instability. But the most dangerous similarity between 1973 and 2026 is invisible. It's psychological. In 1973, people believed the system was stable. They trusted the trend. They assumed growth would continue. And that belief delayed their reaction. Now look at today. People believe technology will solve economic problems. They believe markets will always recover quickly. They believe governments will step in when things get bad. This creates a false sense of security. And false confidence is the early stage of every major disruption. Because when people feel safe, they stop preparing. And when they stop preparing, they become exposed. After 1973, the impact didn't happen all at once. It unfolded over years. Inflation stayed elevated. Growth remained weak. And the middle class experienced sustained pressure. But something else happened. Wealth didn't disappear. It moved. From people who reacted late to people who understood early. Now look at 2026. We're already seeing early signs. Asset volatility, pressure on wages, rising cost of living, uncertainty in policy direction. This is not a sudden crash. It's a gradual shift. And gradual shifts are more dangerous because people adapt to them instead of reacting. Now here's the separation point. Average individuals follow headlines. They react to what already happened. Strategic thinkers focus on patterns. They position before outcomes become obvious. Right now, informed capital is doing three things. Reducing exposure to unstable environments, focusing on consistent, reliable cash flow, and preparing for long-term structural changes instead of short-term trends. Because they understand something most people don't. Opportunities don't appear when things are clear. They appear when things are uncertain. In 1973, the warning signs were visible. Energy disruption, rising inflation, policy confusion. But most people ignored them, and the cost of ignoring them wasn't immediate. It was gradual, and that made it even more dangerous. Now in 2026, the pattern is back. The signals are clearer, the data is available, and yet most people still believe everything will stabilize on its own. So here's the uncomfortable question you need to answer. If this is another 1973, do you think you'll recognize it in time, or only after it affects you? Comment below. Are we already in a stagflation cycle, or is this just temporary noise? Like this video if it changes how you see the economy. And subscribe because this channel doesn't follow headlines. It breaks them down. Because in every economic shift, there are only two outcomes. You either understand the pattern early, or you become part of it later. And the difference between those two is awareness. Right now you have it. Question is, what will you do with it?